Hey, everybody. On this week's episode, Paul and I are going to dissect an article on a popular blog that's out there that talks about the top 10 reasons to regret the purchase of whole life insurance. So, we're going to talk about how there's bad advice, there's a better use for your money elsewhere, that, hey, there's changes in your life and you may not even need it. It's unnecessary. It doesn't do anything for asset protection. Those are the first five. And this is going to be a two-part episode. We'll cover those first five in this one, and you guys can listen along and make your own decisions on why whole life insurance sucks, or maybe it doesn't. So we'll leave that decision up to you guys. So hope you enjoy the episode. Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. Hey, Paul. How's it going, buddy?
Good. How are you?
Good. I'm glad you put a hat on. You woke up. I saw you and was like, nice hair. You got quite the bad hair day going.
Yeah.
So
I have a lot of cowlicks, and it just.
Are you going to let it grow out when you retire? I mean, basically now, right? You could do whatever you want right now.
Yeah,
You have to
I could
put the
do whatever I
uniform back
want.
on?
Tammy hates when I have hair like this. Like it's, when I have hair, I guess.
That's crazy. Yeah. Hannah hates when I get a haircut.
Right.
It's like, and then I shave, and then it's even worse. So, but yeah. So do you have to put a uniform on again?
I mean, I'll have a retirement ceremony
Yeah.
due in February, and
Okay.
there's going to be some like stuff I have to do in uniform, but generally, no.
Nice. That's a good feeling, man.
It's a great feeling.
Congratulations.
Thank you.
That's awesome. Oh man. Well, man, let's get right to it because I think this may end up being a two-part episode with as much as we want to talk about here. But sometimes people want to hear all about why whole life insurance sucks. So let me ask you, Paul, if I had a question about how to, what's the best sports car to purchase? What would you say?
Well, you would need to go talk to somebody who's an expert in that field, I would say.
Okay. I mean, I think you're pretty good. I mean, you don't do it
Yeah, I'm
full-time.
pretty
You're not
good.
an expert, but you got a pretty wide range of knowledge.
Yeah, for sure. I mean, you could talk. Yeah, I mean, I'm probably the first stop for you.
So what if you just said something like, McLaren?
Yeah.
Okay, but
Like a
you-
720 or something. Sure.
But you never asked me any questions, right? You never
Yeah.
said,
What do
"Hey,
you
what's your
What do you
situation?"
value? Like, what do you
yeah,
want?
how often do you want to drive it?
How much
where do you
horsepower?
live? How much horsepower? How many seats do you want in it? Like you didn't ask me any of that. You just said a car. And I said, okay, well, I guess I'll go get that. I'll go get the McLaren. Come to find out, I can't fit, anybody else in this car but one other person. So because, you didn't tailor anything to my particular situation. You just said just some random carte blanche answer that apparently is a one size fits all.
Yeah. Buy a McLaren. Invest the difference.
What difference would be left?
Not much.
Not much. Yeah. So that's what we're going to talk about today part of it is, where do you get your advice? So, we'll call this guy out by name. Many people have probably heard the white coat investor. It's a blog, financial blog started by a physician who is not an expert in anything financial. He's self-taught, which we all are, right? Until we become, if we choose to become licensed or an expert in one particular thing. So, you're self-taught, you're not an expert in anything. Maybe you know a little bit about everything, but not a lot about anything. Yet you're going to give advice to everybody as if it's a one size fits all. And you are the expert, right? So, yeah, this, and I've had this, you probably had clients or prospects approach you with, hey, I found this article on, the top 10 reasons that whole life insurance sucks, or the top 10 reasons people regret buying whole life insurance. What do you think? And then you read the article and you're like, are you serious?
Yeah, they're not easy to. They're not. It's not a difficult task to tear those articles up, or it's the same thing like, hey, I googled the top 10 life insurance companies in America, and it spits out. I didn't notice the company that we're going to use is on there. And it's like, listen, man.
Well, maybe they didn't have it in their marketing budget to pay to be listed as one of the top 10 on that website.
Yeah, maybe they're more focused on having their clients receive a proper dividend. Their policyholders.
Yeah, there you go. So we thought it would be fun to just, tear up an article that if somebody just is reading this and let's say it's a physician, because this is geared towards physicians who work ridiculous hours, right? 60 to 80 hours a week for the first 10 years of their life. They're not making much money. They've got massive debt, most of them.
Yes.
And then they're trying to live that doctor lifestyle that everybody expects them to live, driving the BMW, live in a nice part of town, send the kids to
be in a
private
country
school,
club of some
country
sort.
club. Yeah. Like, not that they have any time to visit the country club, but so these people, these men and women don't have a whole lot of time to sit down and really, like, they're about to start making really good money. But they don't have the time to set aside and dedicate to how to best utilize that money. So what do? Well, they go to a one-stop shop and a website, a blog to learn from another physician who supposedly has done the research on their behalf and can give them all the advice they need. So, which sounds like it makes sense, right? It's a shortcut. Hey, what does this guy think of whole life insurance? Let's find out.
Yeah, and Dave, I noticed that this website, this blog, I guess, has pretty much an infinite number of affiliate links.
There's a lot of links in here. Yeah.
Lots of affiliate links. And for those of you who don't understand what an affiliate link is, it's like you click on this little ad and they're gonna get a little kicker when you go buy, one of them on here is basically hourly financial advice for physicians that you can pay someone to, and you're talking to somebody who seemingly has some sort of credential. Not that credentials are everything, to be honest with you. There's a lot of people with credentials that are morons.
Yeah. And supposedly they're completely unbiased, because that's who you're
completely
supposed
unbiased.
to talk to. You're supposed to talk to somebody unbiased. Let me ask you a question. Everybody listening, what are you an expert in? What's your field? If you're in the military and you're in the Army, are you unbiased that the Army is the most valuable branch of the military? If you are a physician, are you unbiased towards whether Western medicine or Eastern medicine is the best solution? No, nobody's unbiased. If you're an expert in something, if you're very well educated in a certain topic, you are absolutely 100% biased towards that.
Correct. And I would say, looking at this particular article, that this is simply a regurgitation of the crap that A.L. Williams was pushing in the 1980s.
Yeah.
It's the same thing, right? Or, Dave Ramsey, you could change this to a from doctors to just regular people, and this could be on Dave Ramsey's website. It's the same.
Yeah. He probably got most of it from Dave Ramsey's website. Who knows?
Probably did, or AI, right? It's the same stuff.
Yeah.
So nothing completely shocking here, but this is what we're dealing with. This is what the general public has easy access to, because Google, and this is what is popping up. And none of the things that I've read generally open source, unless they're from our side of the fence, are even remotely accurate.
Yeah.
So
yeah, right.
Keep that in mind as we go through this.
Yeah, we'll go through these one by one. But back to the biased feedback, here's what I would say. Instead of trying to find somebody to give you financial advice who's completely unbiased, find multiple people who are biased in one specific area. Like us, we're biased towards properly designed dividend-paying whole life insurance.
Right.
So talk to us, and we will tell you all the reasons why we put so much money into this product. And then go talk to somebody about, index universal life. And then go talk to somebody about, buying term and investing the difference. Somebody who's biased in every area, and then make your decision.
Yeah. And then, we recently recorded an episode with somebody who is a retirement advisor. So, in securities and Wall Street based products, who is a big advocate for dividend paying whole life insurance and is involved in that himself, where he could be taking seemingly more money under management, but instead
Right.
he's having his clients also do this, having different pots of protection, different pots of money. So anyway, you're absolutely right though.
Like if I'm going to go buy a sports car, Paul, I'm going to go to a Ferrari dealer and talk to a biased Ferrari expert on why I should buy a Ferrari. Then I'm going to
Yeah.
go to an Aston Martin dealer and ask why should I buy an Aston Martin. And then I'm going to get honest feedback or biased feedback that I can then decipher and figure out which one do I want to go with.
Yeah, and maybe you find somebody who owns those products and talk to them. Hey, what is your experience with this product? Oh, the maintenance is terrible. It's always in the shop for an electronics issue. Oh, well, it's a British sports car. Of course it is.
Get the insurance on it. Get the coverage,
the
extra insurance, the extra coverage.
Yeah, that's right. All right, let's
Yeah.
go through these things.
Okay, well, let's do it, man. So this article is titled "Top 10 Reasons to Regret the Purchase of Whole Life Insurance." Otherwise, could be titled "The Top 10 Reasons Why Whole Life Insurance Sucks." So,
Right.
number one reason he says, and he goes 1 to 10 instead of 10 to 1. But number one, bad advice is people get bad advice when they go talk to a so-called fiduciary or a financial advisor or something like that, and then they get advised to, hey, buy this whole life insurance policy.
Yeah, and you and I both were with a firm once upon a time that, they had the kind of like the three aspects. It was insurance, investments, and savings. But I don't feel like I was getting bad advice. The advice I was actually receiving was good advice for what it was. For me at the time, it was better than doing nothing, right? Than spending it
Yeah.
on 6 packs of beer on the weekends or something and pizza. I was getting good advice. Just didn't get, I wasn't exposed to the right way of thinking, I would say, and I wasn't exposed to the right product to support that way of thinking.
Yeah.
But it wasn't bad advice necessarily. It was the advice everyone else was, in my, cohort was getting anyway. So,
Yeah. And then the last line of this paragraph is pretty telling. He says, hey, you shouldn't go to a used car salesman and expect unbiased advice when you ask whether you should drive to work or ride the train. Likewise, you shouldn't go to an insurance agent and expect the right answer if you ask whether you should max out your retirement accounts or buy whole life insurance.
Yeah,
What's wrong with
let's
that
talk about
sentence
that.
from our point of view?
Well, he's looking at it as an either or choice. Either you can max out your retirement accounts, which you have no access to until you're 59 and a half generally. So that's nice. Or you could have whole life insurance, but you can't do both, which of course we've talked about at length on this podcast. It's simply not true.
No,
You can do both. This is an and asset. You should have protection through whole life insurance and you can have investments all at the same time. It's magic. Oh my God.
right. Yeah, I would never advise you to just completely stop investing, period, and only do whole life insurance. That's not my role. My role
Right.
is to show you how you can do both and how this will add certainty to your portfolio and your life and give you something that you desperately need, that everybody needs.
Yeah. And that's kind of the sad thing with the buy term and invest the difference crowd is they don't understand the value or the process. They're focused on the product purely. There's no talk of
Right.
banking, and we'll get into that a little bit, but of controlling the banking function, of sequence of the money, because they don't understand the product. They're not doing it. They don't own it, and they don't know how it works. So, of course, to them, it seems awful that one would. What? You want to pay more whole life insurance premium as you get older? You want to just keep opening up new policies? Why would one do that?
Yeah.
Well, that's what we are doing. There's got to be a reason for it other than, well, we also market and sell the product, but we also own a ton of it and will continue to own a ton of it. So we practice what we preach, and don't have our website loaded up with affiliate links. But anyway, I digress.
Yeah, that's true. I mean, I mean, that's yeah, practice what you preach. That's another good point. If you're going to buy a product from somebody, do they own it themselves? If I go to an Aston Martin dealer and say, why should I buy an Aston Martin? He just raves about the Aston Martin and hates on the Ferrari, and then I see him drive off the lot in a Ferrari.
In a Ferrari.
Right? That's not really it's not operating.
Well, maybe his
with
Aston
integrity.
Martin was in the shop.
Yeah. Man, you're hating on it.
Oh, I love them. They are, you know, they're British.
They're high maintenance.
They're high maintenance. That's
Yeah.
right. Yeah. So it's again not a binary choice. Yeah, but they don't know that.
Yeah. Right. And you're not, this article is not allowing them to even contemplate the fact that you could do both. Like, that's not even a question. So, unfortunate. Okay. Number 2, there's a better use for your money. So, in this paragraph, he mentions, 10 different things with affiliate links. No doubt, if you continue
Yeah,
to
there's a
click
bunch.
that everybody should be doing before they start a non-qualified investing account, which kind of weird. He calls whole life insurance, at least what I'm assuming here is he's referencing whole life insurance as a non-qualified investment account. So
Yeah, there's
putting
there's
it
a
in
huge
that.
red flag.
Yeah, there's a big red flag, right? Just calling it an investment in the first place.
Maybe he's
Non-qualified. That sounds
wrapping
pretty.
variable life into it or something. I don't know,
Yeah.
but he doesn't say here, but
Yeah,
he says whole life, I guess, specifically. So no, he's not talking about variable.
and why would non-qualified be the last place you would ever want to put your money? So he's recommending the first place you should ever put your money, obviously,
It's qualified.
is into a government-run, government-created, government-controlled investment vehicle that you have zero access to the capital, without penalty or severe restrictions or taxes.
Yeah, what's interesting, folks, is in this paragraph 2 here, he's talking about how, money's tight. They get student loans. They get all these other things they need to do before they start building their own capital. And of course, we look at this completely upside down from the conventional wisdom, don't we?
Yeah.
Where if for example, you're a doctor and you have student loan debt, it's $300,000, and you're like, I'm going to pay an extra $1,000 a month on that loan. We would encourage you not to do that, wouldn't we, Dave?
Pay yourself first.
Pay yourself first.
And that's just like, that's conventional wisdom as well. Pay yourself first. And people kind of say it, but they don't really mean it. What they mean is invest in a qualified plan first. Like, the first thing you should be doing is investing instead of saving and paying yourself first and having access to capital. So completely different paradigm.
Give me your money to manage first.
Yeah. Right.
Yeah.
So there's a better use for your money. No, there's a different use for your money, and everywhere you put your money has a purpose. So the purpose of putting your money in this area into dividend paying whole life insurance is access to capital and a guaranteed death benefit that lasts longer than you do.
Yeah, that's right. And I would say this, and I'll throw him a bone, kind of, even though he's not talking about this, but I'll say, you and I are big supporters of convertible term insurance.
Sure.
So from the buy term and invest the difference crowd, if it's going to be term, it better be fully underwritten convertible term that you could, when necessary, turn that into a whole, convert that death benefit into a whole life policy at a later date without having to show additional medical qualification.
Yeah.
So maybe that could be the case for a young doctor who's not making a lot of money and has a lot of expenses. Maybe they just start out with convertible term, but they understand the process of the infinite banking concept. They understand the value of whole life, and they're planning on converting that once they start making the big bucks.
Yeah. And that leads perfectly into his number 3 reason why whole life insurance sucks is life changes. Like, oh my gosh. Just like you always say.
It's almost like the future's unknown.
You mean life is going to change? Something's going to happen that I don't anticipate over the course of my lifetime. Absolutely, 100%. Which, wouldn't you like to prepare for the unknown? So this is what this guy just exposes his complete ignorance with this one statement right here. If you buy a whole life policy and a couple years later decide you want to work part-time or take a sabbatical or something else happens to your income, you can spend less money and save less money for your retirement, but you know what you can't cut back on? Whole life insurance premium. You've just picked up a massive fixed expense. That is 100% incorrect if the policy is designed properly. Right?
Yeah, of course.
What can you do?
Well, you have, with whole life, you have non-forfeiture options. So let's say that was the case. Well, first of all, I mean, I kind of feel like he's assuming like some people are just stupid or something. And maybe a lot of people are. I don't know, but a doctor, these are generally detail-oriented people who are going to read the contract, and we are always explaining, hey, you have non-forfeiture options. One of those is something called premium offset, right? Where you could use the non-guaranteed dividend at the end of the year to offset the premium. So that's one way that this doctor who wants to take a sabbatical or work part-time or whatever, cut back. Mm-hmm. This would be, generally speaking, though, let's face it, this is the last thing, this is the last place I'm going to cut back on. Is my whole life insurance premium. The last place. Because I understand what's going on.
But let's say you needed to cut back. You can't fund the full premium.
Yeah, I can use the dividend to pay the premium. In year 11, it'll pay the entire base premium.
Yeah, the base premium.
Before that, it'll offset increasing amounts every single year leading up to year 9, 10, 11, whenever it starts to kind of break even.
Yep, so you have that option. But the way these policies are designed, if you use it, if you go through somebody who's fluent in infinite banking, is you're going to be able to cut the premium roughly in half if you ever need to. You're not stuck to a fixed premium.
Correct. You could just pay the base, is what Dave is saying.
You could just pay the base, that paid up additions portion of the premium, which oftentimes is 50% or more,
sure.
Is not required. So you can cut back. And then guess what you can do the next year? You can go make up for what you didn't pay the previous year because now you're back on top.
Right.
You're working full time again, and sabbatical's over. Yeah. Or you became an attending and you're making a whole lot more money overnight. So there you go. You can absolutely cut back, and there's many ways to do so.
Again, he doesn't own the product. None of these people have any idea what they're talking about when it comes to the product. And it shows.
Yeah. He relates whole life to being married. It's either death until death do you part, or it's going to cost you a lot of money to get out. Well, I mean, that's funny. That's humorous. And I can see the analogy. But the fact is, at some point, you're going to have everything you ever put into it, and then some.
And that's not too far in the distant future.
Yeah. So
on my original policies that you sold to me, that's year 7 on Tammy, and year 7.
Yeah.
Completely break even.
So there's a break even point, and he actually mentions a break even point somewhere in this article, but at some point, if you do this long enough, you're going to have everything you ever put in. So you can get back everything you ever put in if you want to surrender it, or you continue to build and capitalize your system with more than you've ever put in. Right. It'll continue to grow above and beyond pretty drastically. So, okay, number 4, unnecessary insurance. As a doc becomes financially literate, they realize that insurance is, on average, a bad deal. And you're talking doctors. Do they really think insurance is a bad deal? Like, how many different, they have malpractice insurance. I'm sure they all have disability insurance.
I think some kind of like professional athletes, like I think Rob Gronkowski had like his hands insured, or his arm, or
for sure. Yeah, you can have body parts insured. Yeah.
If you're one of those, and there's more robotic surgery nowadays too, but still, their hands. It reminds me of Chevy Chase in Spies Like Us. He's like had a nerve. Have you seen that movie?
Yeah. Long time
ago.
God.
Long time ago. Great movie. Anyway, suffered an injury. Anyway, no feeling at all. But so yeah, they understand. Of course they understand. And they deal with clients, especially if they're in private practice, they deal with people who insurance is a big deal, health insurance, putting quotes. The Obamacare whatever, private insurance, government provided insurance, whatever it is, that's a big deal. And they deal with that in their private practice, of course. In fact,
Yeah.
they have an entire section of people that just deals with that stuff
Yeah.
in the office. So
Right.
yeah, they get it.
They understand. And insurance really is only a bad deal if you never use it, if it never pays out. So is term insurance a bad deal? I mean,
Statistically,
statistically, it's a bad deal.
correct.
Statistically, it's not going to pay out, but you're crazy not to have some kind of life insurance if you have dependents, right?
Right. Everyone knows our stance. I mean, if you've got people depending on you and you don't believe in whole life, you better have convertible term.
Yeah. But term insurance is also a sunk cost, just like every other type of insurance out there.
Yep, it is a
Once you
sunk
pay that
cost.
premium, you're never getting it back.
Correct. Gone
Except
forever.
for whole life insurance. You will get that
Correct.
back. So tell me which is a bigger which is worse, something that you pay into, you're eventually going to get it all back, or something that you never get back. Period.
Yeah, recently, Dave, I've talked to a few people, and that was their take. They're like, man, it's just, you pay on the term forever, 20, 30 years, and then you've got nothing to show for it.
Yeah. And unfortunately, what that does is encourage people to get as little as necessary,
Right.
to get a very small amount, because they don't like paying for something they're not going to need. Most likely, 98% chance they're not going to need it.
Well, right. It's just not going to pay out. I mean, it has its value in that you have protection, and I can't
Yeah.
really put you can't really put a price on that, I suppose. But
If you don't have any, you're being negligent. Like,
that's negligent.
you just don't love your family enough to pay a little bit of money every month to make sure that they're going to be protected. Right? That's the way I see
Right.
it. You're being
That's right.
selfish.
Yep.
So, and if you think I'm being mean, then I grab a tissue. I don't care. But you're being selfish if you don't have any insurance and you have dependents. So, unnecessary insurance. Yeah. I don't know what else to say about that.
Yeah, he goes into like some things on long-term care. I guess he doesn't like that either.
Yeah. Or people are suckered into buying whole life insurance just to get the long-term care rider. The long-term care riders, well, which we call it typically a chronic illness rider, it's pretty phenomenal as an add-on. It doesn't cost you anything, actually.
Right.
Anything extra.
Yeah,
I mean, it's all baked in.
yeah.
Of course, it costs something because it's all baked into the price. But
That
Yeah.
of course. But again, when you trigger that, you're allowed you're especially in a younger policy, you're fronting future death benefit. Right? You're bringing that future
Yeah.
death benefit forward to the present day. And that is quite nice. That's a nice rider.
yeah,
I look at
Right.
it as a positive thing. I'm not really sure what he's talking about, but
yeah, me neither. No. Again, not a professional. You're taking advice from somebody who gets their understanding from somebody else's misunderstanding.
yeah, got it from Siri or Alexa
Yeah.
or something,
Or,
some
yeah,
other AI
ChatGPT.
bots.
Yeah. All right. Well, number 5, asset protection. So he talks a lot in here about the cash value. Hey, in some states it's not protected, or it's very weak protection, which he defines as protecting less than 250,000. One of the great benefits of this product is its asset protection. But what asset does he not even mention here? That's the most important asset of all. Us.
Oh yeah,
He doesn't talk about protecting the number one asset in your life, which is you,
Me.
the money machine, the money maker. Right? Yeah,
we get an episode on that too.
we do. Right? So, I mean, what asset creates the cash for every other asset that you own? You,
You do.
the person making
And
the
wouldn't-
money.
Right. If you're the machine that makes the money, why wouldn't you protect against losing that machine with insurance?
Right. Yeah. So, no mention of protecting your family in here either. So, you're
No. And he has 4 kids,
Oh, okay.
according to
So-
his bio.
Well, It's okay because he'll have plenty of other assets that he'll be able to inherit tax
From
free
all
and
these
access the
affiliate
capital
links.
anytime he wants. Yeah. So, but yeah, realize whole life insurance does create pretty massive creditor and bankruptcy protection, even in many states.
Yeah, and you can actually the more famous one was during the or actually before that, like 03, 04, 05, the Enron stuff with what Kenneth Lay and yeah, I think it was Kenneth Lay.
Kenneth Lay.
Had,
Yeah, I forgot the other guy's name.
significant. Yeah.
Yeah,
Oh, Jeffrey Skilling or something.
Jeffrey
like that.
Skilling. Yep.
Yeah. Right.
Yeah.
But Kenneth Lay was famous for having significant life insurance assets that were protected. So
And protected, right? I've got a firsthand story from somebody here in Minnesota who,
oh right,
they went through a big investigation with a 3-letter federal agency, and at the end of the day, they had to liquidate every single asset they owned except their whole life insurance cash value. That was the only thing that they had remaining that went untouched. And he actually lists Minnesota as one of the states with weak or no creditor protection.
right.
Well, I got news
there
for
it
you,
is.
pal. In Minnesota, this person, the only thing they had remaining was their cash value. Pretty
There you
incredible.
go. Amazing.
Yeah. Well, we hope you enjoyed the first part of the top 10 reasons to regret purchasing whole life insurance, otherwise known as top 10 reasons why whole life insurance sucks. Next week, we'll cover the next 5. So just a little preview on that. We'll be talking about, how the tax advantages are oversold. They're really not that great. You actually get negative returns and you get very low returns. The cost of insurance rises, and non-qualified investments, for some reason, that's thrown into the mix on why those aren't even that bad. But anyway, we'll cover the next 5 reasons next week on why whole life insurance sucks. Hope you guys enjoyed this episode. And again, we'll let you make your own decisions on what you really think of it after seeing both points of view here. So, hey, until next week, control your capital, or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.